profitable trading floors in the world, this is what we were doing to retail traders like yourself. Can you see these numbers inside the candlesticks? That's you, trapped retail traders being hunted down by banks and institutions. Can you see they're doing the complete opposite to you on your retail charts?
Morning all, how are we doing? Sorry, I had Neerav this morning. I had to pop him on. How are we all doing? Morning Stevie, morning Peter, morning Ladder, Diamond, Thimber, Jane. Hello everybody. Sorry, I'm late. Always late on a Thursday. Had a spin class this morning. First one back since I've been ill. Oh, that was hard. I think I'm still sweating. No, I know I'm still sweating. Don't stop sweating about half an hour. So I didn't post in the Telegram group that the live room's live. There we go. Excuse me. Morning, Chris. Still got a bit of a frog in my throat. There we go. Right. Just a quick recap of yesterday. I did 1% yesterday. Couple of DAX trades. Those tiddly. Yeah, these three here are those ones I took in the live room. Those little ones. I was just kind of proving a point, wasn't I, about going short and having no idea which way it's going. That one there and that one there. Those are those two little ones. I closed out one of my more proper DAX trades yesterday, which is from back here. That one there, somewhere. We've gapped up a tiny bit this morning. I have also got a sell limit up at yesterday's high, basically. So if you look at the price action on the DAX for the last 4 days now, we had the big push up on the US news. We had a rotation day, a rotation day, a rotation day with a bomb in the middle, and a rotation day. So basically, we've gone nowhere. We're coiling ready for what I think is going to be a big drop. I'll go through this in a minute, but Euro Swiss took one off there. Actually, what's that? That was obviously some other little thing I took in the live room for some reason, didn't I? It was it was just a trade to see. Yeah, we were talking about stop losses, weren't we, and how you get stopped out. There you go, proven point. Aussie dollar Swiss took that reversal alert and got out there. And US dollar CAD, I took one off of that as well. Been in this for a bit now. US dollar CAD, it's going nowhere. So I decided I just wanted to get out of something, basically, because I wanted to put some money in the bank, because nothing is going anywhere. As you can see, it's all sideways. So just, morning, Alex. Just a quick look at the indices. Just wanted to discuss indices quickly, because yesterday was quite an important day, I think, on the indices. And I get the feeling today we're going to have a big move for some reason. So we'll look at the news in a sec, but I just wanted to cover what's happened with the indices. So I just wanted to point out the divergence we've got. Morning, MK, at the with the indices. So Nasdaq yesterday during the Globex session, obviously as usual, went sideways. We had a nice drop and then sideways movement. The sideways movement was a little bit of a push up and a pull down. Yeah. If you look at the S&P, we had a similar sort of move, a little bit of a drop and a bit of an accumulation yesterday. A bit of a push up, bit of a push down. And then look at the Dow, what the Dow did yesterday. The Dow didn't even break out of the London range yesterday. In fact, it went into a contracted range. And look at the wicks here. We had virtually no movement at all on the Dow. When you compare it to the other US indices, it's probably more clear on a 5-minute chart. So that's the New York session on the Dow. That's the New York session on the other indices. You can see, obviously, there's quite a big disparity. Well, DAX obviously went sideways because it's the DAX, but so there's a bit of a disparity there on the Dow. It contracted really, really tightly. Chopped a lot of people to death, I'm sure. Again, which brings me to my point yesterday, what I was saying about how I make money in trend days and how I lose money on rotation days. Prime example of how most scalpers will get absolutely destroyed in a session like that. I don't know, don't really watch paying attention to any other people, but there's probably a lot of people that got killed yesterday in that sort of price action, and it tends to kill most people. It's the trend days these days that you make your money. So yeah, but I wanted to point that out. If you look at it on the daily, look at the price action since we had that push on the US, and look at obviously where we are headed in a bear market. This is all poised right now for that next leg to start. The difficulty we've got now, the decision we have to make is, are we going to get a Santa rally this year or not? And it's going to start virtually now. We're towards the end, middle to end of November, which is typically when we start to see things starting to kick off. It's interesting, isn't it? We've got a big bear market, but the market has certainly paused, hasn't it? So we are coiling. We are ready for a big explosive move in one direction or the other. And we're going to get one of these big old candles with these big down days or big up days. I don't know, but we're going to get a big day. So it could be today. Looking at the news today, let me just turn off yellow. It's the only way I can see oil. Oil's, mind you, I know it comes out Wednesday, 3:30. I don't know why I even need to see it because it's always there. Today we've got, we had the Aussie unemployment. We'll have a look at that in a minute. Today's the big one for the pound. So it's the budget, what they call in the autumn statement, but in all intents and purposes, it's a brand new budget. So it's our fiscal policy for the UK being announced. It's 11:30 this morning. So I would imagine we will probably see a fairly sideways morning ahead of this, because this is going to affect an awful lot of other currencies as well. But we'll see what happens. But this is the big one today. We've got Bullard speaking a little bit later. We've got Fed as well, which that does tend to move the market depending on what's happening with manufacturing. Manufacturing is obviously part of a big export, and obviously if that's down, it's not particularly good for the economy. So we will see what happens with that. We've also got unemployment as well. But that's it. The rest of the week is done. We've got Lagarde speaking tomorrow. We've got retail for the pound, which doesn't tend to do a lot. Sometimes it does if it's miles out. But as you saw from the US dollar retail yesterday, wasn't a huge movement. Very positive figure, but not a massive movement off the back of it. It's not one of those where we get a big spike. It will move, but it will be a gradual thing. So once the autumn statement's out of the way today, that's it. We're done. Overnight news, not a lot that I saw. I've had a quick flick through this morning. Usual Bank of Japan, we're not going to let prices go any higher stuff. Or the rates we had, trade balances, that sort of stuff. So nothing exciting. Just going to see if there's anything on the war, but no. The rocket hit that we had, which caused that massive movement in the indices, isn't a real rocket hit. So they didn't actually shoot at Poland. It was just one that went off course. Although going off course by 35 kilometers is a pretty bad shot, isn't it? It's not good, is it? It's like aiming for, I don't know, aiming for London and landing in the middle of the sea. It's just, it's not a good shot, is it? 35 kilometers off. There's dumb bombs and there's really dumb bombs. That was obviously a really dumb one. And even if you try to shoot something out the air, if you imagine if something was going toward land in Kiev and you shot it out the air, you're not going to shoot it out the air by 35 kilometers, are you? So that was obviously a very, very, very bad shot by someone, which I imagine he's been shot. But anyway, so it's all kind of stand down tensions with NATO, which is good. It was a Ukrainian missile, was it? Oh, I don't know. I thought it was a Russian one that went astray, but to be honest, I haven't seen a lot of news on it. It was kind of all panic, and then it didn't even make the 6 o'clock news last night, sort of thing. So, not that I saw anyway. But that's done. So the market is opening in a minute, pushing up. Well, the market is opening now. Just one thing I wanted to clarify from yesterday. Somebody DM'd me yesterday about. I read it was a Russian made, but it was from a Ukraine anti-aircraft defense system. Fired, yeah. I mean, it doesn't matter, does it? And if it was a Ukrainian one, what the hell are they doing shooting into Poland? That's the worst shot ever, isn't it? You're meant to be shooting that way. Anyway, something went wrong. It was a backfire, wasn't Yeah, just wanted to clarify something. Somebody DM'd me yesterday who watched the replay of yesterday's live room where I went through, we were talking about taking trades. You got a 50-50 shot every time you hit the button, that type of stuff. And I showed a spreadsheet yesterday, which was my analysis on the DAX that I've done, trying to find edges on gaps and this sort of thing. And I basically said in the live room yesterday, look at all the information on here. Sorry, this is the wrong spreadsheet. It's this one. Okay. Look at all the information in here. There's no edges for us on the gaps. So when I was talking about when we gap up or gap down, I was looking at the statistical averages of gap ups closing and not blah blah blah, and it's all roughly 50%, wasn't it? And I said there's no edge there. What I meant by that, which I think I didn't clarify, was that there is no edge to say every time we get a gap up, you take a short and it will 70% of the time fill, giving you a 70% edge, which gives you an edge which will obviously be very easy to exploit. What I actually meant was we know that gaps get filled roughly 50% of the time when they gap up. So they fill roughly 50% of the time on the same day. Now, that doesn't give us a statistical edge that you can play out automatically, but it still gives us a statistical edge in the fact that if we have a risk reward, so right now we're here, we've pushed up to there. So if I was to hit the short button right now with a stop there, I know there's a 50% chance that trade is going to work out. So it's no different to normal. There's a 50-50 shot every time you hit that button, isn't there? What the edge is, if you like, with the statistical data on gaps is that we know they get filled. So what it does is it gives us a trade idea. Yeah. So there's no more odds of this actually working, this trade, than any other trade I take. What it does give me is a trade idea to take. So it's a setup, if you like. So what that statistical data with gaps gives you is it's a setup, right? So, a bearish engulfing at support and resistance is a setup. RSI being extended and reversed alert is a setup. A gap up and an opening range break to the downside is a setup. So it gives you a setup idea. That's kind of what I was trying to say. What I was probably badly, but what I think I would probably alluded to was the fact that there is no edge in trading gaps, so therefore don't do it. No, that's totally wrong. Do it. But be aware that 50% of the time your trades are going to fail. So what you need is a positive risk reward ratio when you get a gap. Yeah. So that's kind of what I was alluding to, if it wasn't clear. Sell limit's just about to trigger. There we go. I'm in another sell. DAX up at the highs of yesterday. This is one of my funded accounts on E8, which I'm ready to trade again now. That's what the US says. Ukraine says it was Russian, so who knows? Yeah, I mean, misinformation. It's half of war is misinformation, isn't it? You don't know. You find a piece of a rocket that's made in the US that was sold to the Ukraine, but everybody says it's fired by Russia, or it was a Russian rocket that was stolen by US special forces and given to Ukraine to fire into Poland. There's all sorts of things it could have been. At the end of the day, it was one rocket, went astray, and they're not going to escalate it, which is the main thing, isn't it? Because obviously an escalation in a NATO country means war. It's World War III, isn't it? Article 5 triggers. You got 20, 30 countries all having a crack at Russia. It's not going to be good because they've got more nukes than us. So I'm just watching this opening range, just seeing if we get some rejection at the highs, because obviously I'm looking for a drop this morning. From a daily perspective, obviously I'm ready for this to come down. So there's two levels here I'm interested in. 144.41, which is the high of the week, and yesterday's high. So those two levels there are what I'm interested in shorting this morning. How far away is that one? 60. Okay, I'm going to go one short, and I'm going to go second entry under the low of the opening range. So that would be an opening range breakout for the gap fill. So first entry and then second entry there, and close both down there. Where is the gap fill? 42.53. Fog of war, as they call it, yeah. Right, so let's just let that play out. Right. So, current exposure, oil is killing me. I really don't want it to turn into one of those golds, but it's not doing what it's told, is it, at the moment? So exposure at the moment is on the DAX. I've got 2 positions on the DAX, third one just taken this morning. So not worried particularly about that. I'm just about an ADR average at the moment, which is fine. That's only because I took my one position off yesterday, which I've just added back on. Aussie, New Zealand, coming down again this morning. So I will add into that. This is the weirdest price action in the world, isn't it? Look at it. It's bizarre. We've got this low holding here. And we've got these huge wicks, which are decreasing in size and becoming bigger on the top. So it's almost as if the buyers are winning out, not quite winning out as much, not quite winning out as much again. And today it looks like they're losing, but we're holding this low. It's just very weird, this price action. Ordinarily, you'd expect that to break to the downside, which it might well do today. So I don't know what's going on with that, but I'm within an ADR on it, so not too worried about it at the minute. I'll deal with it as we go. Euro US dollar, still 2 positions on that. That's gone nowhere since I got into it, basically. So I got into it somewhere around there. We've just put in a whacking great candle. We're inside bar and inside bar, so not going anywhere. New Zealand dollar CAD, got 3 positions on that. Third one just gone on yesterday. We're on 1, 2, 3, 4, 5. We're on day 6 up. We just about made a new high yesterday, but only just, and obviously put in a higher low. So we are starting potentially to roll at the highs there. We're extended on the daily as well. I got US dollar CAD long on as well. Again, just the one on that. I took one off yesterday. As you can see, I took that one there. Again, we've got a low hold. We're not making any progress. Nothing's going anywhere. We're just totally sideways across the board at the minute. It's just frustrating as hell. And oil. So oil, we're obviously looking for this market structure break to continue. We got the double top. So I need this area to hold here, which is around about $82 a barrel. I'm looking for 84 to 85 to be the low. So this is 84, where we've basically tapped into and rejected twice now. We previously rejected it before as well. After we pushed up, we rejected it at 84. We came back down, rejected at 85. We came back down, rejected at 85. Came back down, rejected at 84. So 84, 85 is really where the market isn't happy to go below. So I just missed my buy limit order yesterday. Really annoying. Like, just missed it by that much, because I was getting in at yesterday's low and it just missed me, and it came down and I thought, oh, it's going to get me this morning, and it's missed me again. Yeah, I'm fortunate, but I've got a position on here anyway. So I'm a little tight spaced on this, not too bad, but I'm a little tight on it. The half an ADR is 18. I'm in at 10, 17 and 10, and that would have been 15 if I'd have got in on it. So I'm a little bit tight, and I'm a little bit over leveraged on size as well, which is why I've got a little bit more exposure on than I was hoping on this. I'm 3% in DD on it. But as you can see, I'm well within an ADR. So if we can get a hit, as you can see, I've got a TP up here, which is on this position. If we can get a hit above ADR, above my break even today, i.e. break that high and head for yesterday's, break yesterday's high and head for the previous day's high. What I will do is I will close out that one. I will probably close out that one because by that time we'll be up here, which will be pretty close to that position. And then I'm going to reduce these two down to 0.3s just to reduce my exposure because I'm a little bit overexposed. But yeah, we had good positive news on oil yesterday. And obviously oil came down on the positive news because, yeah, that's what it does on news. Makes absolutely no difference. So that's where I am at the minute. It's coming down nicely. So looking for an opening range low break to add into that to go short down to the gap fill. And then obviously beyond. I mean, the thing is with this trade, if we get down to the gap fill, what I might do is just break even second position and see if we can get a runner because I am looking for a down day. And it's going to be one of those down days that just comes down hard. Yeah, it's not going to be a normal down day. It's going to be a big one when it comes. Yeah, so we're looking for, and the thing with the start of a next leg, the start of a next leg tends to be big. If you look at the previous any trend, yeah, the start of the next leg is a big candle compared to previous candles. Yeah, it's always a big one because it's the sellers. It's basically they're trapping the longs. The idea is when you get in and you reverse direction, you want to trap everybody that's long. So you move fast, you move hard, and you get these guys trapped. You make them puke. You make them become sellers, and as they become sellers, it adds to the momentum, and you get that big candle starting. So I'm looking for a big down day, potentially to break this entire week range. So, you know, looking at where we are here, if we can get that day today, we should be, you know, easily looking to break weekly lows. So you're looking at ADR. So potentially that's what we have got on the cards if we can get a decent trend day going today. But, you know, it might not happen. But that's what I'm preparing for. Equally, we could just push up and, as I say, retest weekly highs and stay in this range. You know, don't know. No one knows, do they? Morning, Amit. Can you check euro pound? Yeah, I'm going to whiz through everything this morning. Sideways. Euro pound. Yeah, I mean, I have no idea. I can't tell you anything about any pound today. Obviously, no one can. It's the budget. It'll go where it's going to go. So 11:30 this morning. It's tentative one. I looked it up this morning because it says tentative. I looked up. It says 11:30, and that's come from the Beeb. So I'd imagine that's right because obviously they'll be broadcasting it live. So 11:30 is the statement. Quite how it's going to affect the pound, I don't know. I'm really hoping it's going to bring the pound down for everybody that's got shorts on. So I know there's quite a few people that are short on the pound at the moment because I've been short bias on it. So euro pound, hopefully, will go up because the pound will come down. But I've no idea. I don't know. It's sideways. If you're going to trade anything, MK, that's got the euro or the pound in, this would not be the one I would trade. Because its ADR is so small compared to every other pair out there. Yeah, you look at the price action on that, yeah, and then look at every other euro pair, and look at the movement, the volatility on everything. Yeah, and then look at euro pound. So it's an absolute mess. Look at all the pound pairs. You pick any pound pair, it's amazing, lovely, trendy, moving, hard, fast, up, down, opportunities to get in and out. Look at the euro pound. Sideways mess. Just leave it alone. Don't touch it. It's almost one I would just take away from your charts. It's just not worth tying up any exposure on. There's much better things to expose yourself on with much better ADRs. Admittedly, euro pound is actually not too bad at the moment. but that's only because we've had some big movement in the last 10 days. But normally this is, I mean, compare it to the rest. Yeah, we got all the euro pairs are like 180s, all the pound pairs are 200s, hundreds and 200s, 180s. And then you've got the euros at 130, 150. And then you've got euro pound and euro Swiss, 83 and 93. Yeah, if you want something that's going to move, those are the ones, not the euro Swiss or the euro pound. Tie it up somewhere else. But don't know, your guess is good. Mine. Flip a coin. It's going to go up or down today quite hard, depending on what happens in the autumn statement. So the budget is a massively important thing because it dictates monetary policy. Yeah, what happens with what Jeremy Hunt announces today is going to influence what the Bank of England will do with interest rates moving forward, because the Bank of England has to react to inflation and borrowing from the government in, you know, bond purchases and all that sort of stuff. So what happens here will be dependent on how the Bank of England reacts moving forward and what happens with inflation. So if he comes out with a load of stuff that says, right, we're going to tax the hell out of everybody, which is what we're expecting, that's going to produce a lot more money for the government, which means they need to borrow less. If they need to borrow less, that will affect interest rates. Interest rates affect inflation, and that is in effect what affects the pound moving up, all currencies moving up and down. So I'm not an analyst, I'm not an economist, so I let them sort that out. You will know today or tomorrow which way the pound's going, because this thing's either going to fly up or fly down. But on a fundamental like this, it's unusual to get a false signal. So if you suddenly see this come down 300% ADR because the pound's gone through the roof, you want to be short moving forward. Yes, play a pullback, but it's unlikely you would get a move like that gets undone. Look at the pound with Liz Truss. Yeah. That was a mistake that got retracted. If that hadn't have been a mistake, do you think that would have happened? Probably not. It would have gone like that. We would have been down at parity by now. But this is the Bank of England intervening in Liz Truss's cock-up. So if this thing flies today in either of those directions, that's the bias I will have moving forward. And it may well flick to a long. I don't know. I have no idea. We'll find out today, won't we? So careful with all your pound pairs, basically. We've got no ADRs so far today. We're on Thursday. We've only got the one weekly, which is the Aussie CAD. Big push to the upside. That rejected after it hit its weekly range. So its weekly range was 149. So that's Monday there. We flew up straight into our weekly range, and since then we've just gone into an accumulation. Yesterday was just crap. It was an accumulation day. Which is why I took a load of profit yesterday, because when nothing's moving, if you watch your P&L, you'll notice this after you've been position trading for a while. If you're going to do it, you'll see this thing. It will jump up to 8%, down to 4%, up to 8%, down to 4%. If you see that happening 2 or 3 days in a row, I just bank stuff, because if this is going to continue, the stuff that I'm in is just going to continue to do that. I might as well put that in the bank, add it back on. Next time it gets down there, put it in the bank again. Add it back on. Next time it gets down there, put it in the bank again, and just keep banking. Yeah, same as I've done with the DAX this morning. I banked a DAX yesterday, didn't I? Yeah, banked a DAX from there, here, down to there. Well, that was the day before, but I banked one from there down to there. And what am I doing? Adding it back on again. Because if it comes back down to here again, I can take it off again. So why not benefit from it twice? So if you see that happening, like flip-flopping on your P&L, just bank stuff. Get it over there, because if it's over there, you can use it. If it's just going up and down, it's no use at all, is it? So, so yeah, that's where we are at the moment. Everything's just flip-floppy sideways, isn't it? We just pushed up again. Opening range high 2. Oh, I've got this set to 15 minutes, haven't I? I have. So on my funded accounts, instead of using the 1.5 hour, I use a 15-minute and a 5-minute. So it gives me a 5-minute opening range and a 15-minute opening range, because what I like to do on my funded accounts is ideally be in and out and done quick. So what I have started doing, let's say, for example, I was going with an opening range breakout long here. I would take the 5-minute break and then I would take the 15-minute break. If we can get a continuation push on that and I'm out with 1.5%, in 20 minutes, I'm done. That's it. I'm out. I shut it down and I'll walk away. So that's why I'm using the 5-minute and the 15-minute opening ranges, just to try and get a double breakout, basically. Obviously, today I'm short, so the 5-minute and the 15-minute is in the same place. So good rejection again on the DAX. Up at those highs. Not interested in going higher. So yesterday's high is holding. And we'll see if we can get any continuation to the downside. I might add a little bit more risk onto this when we break here as well. Right, so let's just whiz back. Keep an eye on that. In fact, haven't got any of my. Let me just. Sorry, I'm just going to open my laptop and stick DAX on my laptop because my other monitors haven't got any other MT4s on at the moment. Just so I can monitor it because I want to add to it. So DAX. DAX. Right. So good rejection you see on the M15 there. Nice big tweezer tops. That feel. Hopefully, we'll see. Nice big bearish engulfing going in there on M5. Right, so ADRs, not a lot to look at. 4 hours, again, not a lot to look at, which is why I'm going to whiz through everything this morning, because obviously with the range bound days that we've had, obviously RSIs are going to start to go flat because everything's going sideways. So RSI obviously returns to the mean. So CAD Swiss was extended. If you got into any CAD Swiss on the extension that started here, obviously you've been scaling in and you're waiting. It's just not going anywhere at the moment, is it? So stuck to the downside on that one, just range bound, but some lovely propulsion gaps on this, on the hourly and the 4 hourly to aim for. So that one there is kind of the primary one there, I would say. And obviously this one, so that's more of a push and drop, but that's a lovely accumulation break there. So this is a range here. There's your break. So this is where I would look to start, sort of as a minimum, really, to get up to 200 ADR at some point. But we're going into a kind of wick off situation down here. So we'll see what happens. But yeah, not going anywhere at the moment. We've got Euro CAD, which is also extended on the 4 hour, way extended to the upside. Again, the Euro will move today a lot with the autumn statement, because the Euro and the pound are very close trade partners. Obviously, Europe and Britain are close trade partners. So what affects the UK affects Europe and vice versa a lot. So we will see what happens with the pound today, but you'll probably find most currencies today will move once the autumn statement has been digested. And as I say, it may not be we get one of those big spikes today. We may well get a lot of volatility around the statement and then a delayed reaction, because the market needs to adjust itself and absorb what has been said and forecast what is potentially going to be happening with monetary policy moving forward. If you drop some real big clangers, like corporation tax, we've decided to stick it up to 35% or anything ridiculous like that, then obviously there's going to be a massive reaction. So again, we don't know. We've had bits and pieces drip fed to us, but no real confirmation until he comes out of his mouth on the statement. So EuroCAD very nicely extended, 4-hour extension. We're extended on the daily as well on that one. And obviously we're in a big downtrend. Oil is suppressing the CAD at the moment. US is pulling the CAD down at the moment. So obviously the euro is taking full advantage of the fact that the CAD's a little bit weak. That I suspect is going to change fairly soon as the US is powering up, and obviously the oil prices are forecast to rise. So we should get some good momentum on that, and obviously that will give that a pullback. Apart from that, 4 hours, there's nothing on the hourlies, and nothing on the hourly 14 RSIs, nothing on the hourly 21 RSIs either. So nothing in line with trend to look at all. So very flat across the board at the minute. Okay, so second position on DAX short. I'm only getting in with half a percent this morning. I'm not going overboard at the moment because I'm trying to catch a runner today, see if we can get that big day in. Might not happen today. It might not happen at all, but I just got a feeling we're going to get a decent move at some point. I'm just waiting for this reversal alert to add another position. And then I think we'll probably get a little bit of a pullback. Might be a bit tight. I'm just going to increase my stop on this additional position that I'm going to put on. Just going to put the, whoa. Sorry, 6,000, not 600. Wake up. Oh my God, that should be 24,000 as well. Not with it this morning. So that is my runner. So I'm going to TP at the gap fill, and then I'm looking for a runner today down to ADR. So I've put a slightly larger stop on that runner. Let me just make sure I haven't got any trailers on this. Obviously, none of this necessarily is going to work. Yeah, I've got trailers on at 6,000. I'll leave those on. Actually, I'm just thinking, obviously we've got the autumn statement today. If during the autumn statement, there is a lot of corporate taxation news, there is a chance that we might get some stocks dropping on the FTSE, which will bring the DAX down as well. So I'm just thinking we may well get a spike off of the autumn statement news on the DAX. So if we are going to get some craziness, I'm just putting my stop all the way down at 200% ADR, because if we get one of these massive candles today, that happens very, very fast. I don't really want to take profit at ADR if we're going to get a big day. So I'm just moving my stop down on the runner just in case. We'll see. Right. Let's run through everything. If anybody's got anything specific they want to look at, let me know. And I can look at it in a bit more detail, but I'm going to run through all the pairs this morning and just have a look at where we are. feels like I've been off for absolutely ages. It really does. Since last Friday, basically, when I didn't do the live on Friday because I had to do other things, and then I got ill. So feels like I haven't done a full rundown for like a week. Yeah, Aussie CAD pushing up towards the highs at the moment. We've got this area coming up of potential resistance, which we've tapped into already, which is here. We are extended on the 4 hour, which we got extended sort of around there at that double top, and it's pushed up higher. Aussie at the moment, obviously everything's taken advantage of this weak Canadian dollar. The Aussie has been very, very weak off the back of their rate announcement, where they didn't put the rates up by as much as we were expecting them to, which obviously the market wasn't particularly happy about. So we've had this big, strong push off the back of the US weakness and CAD weakness, but we're now going into an accumulation extended on the RSI. Long term, obviously, we're in a downtrend, and we've been in a downtrend for since March, basically, since the beginning of summer. So all the way down. I don't really think there's any reason why the Aussies should be beating the CAD. So I'm looking basically for that kind of movement to start another leg down. So we'll see what happens. We are up in the green now, obviously. But if you look back, every time we get up here, it's one of those things. Yes, you get every now and again, you get a little bit of strength, which takes us above the 72. And obviously, recently here, we had a much bigger push above the 72 at the beginning of the year. But this was obviously the market adjusting to the bear market starting, where we had that, the US dollar obviously changing direction quite dramatically as well. So since then, we've gone back into the normal downward trend, which should continue. So I don't see any reason why this isn't a good place to start looking at shorts. You've got this reaction we've got here. We've had an hourly reversal alert. Oh, no, we haven't. No, we haven't had an hourly reversal alert yet. So we'll be getting one today if it breaks down. And obviously, we've got good levels of support resistance coming up here. So there's lots of levels here. If we are going to get a bigger, stronger push, i.e. a pullback push maybe, we've got good areas of resistance that we're likely to get moves at, and it's only a couple of hundred ADR away. So you're not going to be getting in with more than sort of 3, 4, 5 positions maximum really before it starts to come back down, if it doesn't come down from where it is at the moment. So it looks good for shorts. Aussie dollar Swiss, again, another downward mover. We're just going sideways on this one at the moment. Swiss franc obviously just powers up intermittently, which is why you get these big strong moves to the downside, but not really given any opportunities to get in anywhere, is it? But I'd be looking for short opportunities more than longs on it. It's not really getting massively extended. Every time it has got extended, it's worked, but it's not moving particularly fast or hard, and hasn't been since sort of October time. So not really going anywhere on that one. Shorter term, obviously I got in that short there on that extension. I'm looking for short opportunities, so I get into anything short on this on the lower time frames on the hourly with 5-minute reversal alerts, which is what that trade was there. The EA is running just to keep getting me into this short as and when. So like it's short, it's just not going anywhere at the moment. All the yens, I'll quickly run through all the yens because my bias on the yen has not changed anyway until we get some news coming out of Japan as to what is going on with their monetary policy. It's all very closed door at the moment. We'll decide. Bank of Japan will decide on specific monetary policy. It's critical the government, the Bank of Japan, the government and Bank of Japan to exchange ideas. Yeah, we work closely with the government to blah, 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 blah. All you ever get is talk and no action. And then you get the interventions. So the interventions we've had have held, basically. So the last two interventions the Bank of Japan have put into place, the last one held fast. So I think we should be looking for shorts on everything yen based. But as you can see at the moment, a lot of the yens, we are just contracting, and there's no real fundamental bias, long or short, on it. It's just holding its ground at the moment. So it's going to be pushed around by other things. So US dollar yen, for example, when the US dollar drops, we're going to get a pump on the US dollar yen to the downside, obviously. If I'm just thinking what else has moved recently. There's not a lot else that's moved against the yen, is there? CAD yen will have come down, but there's nothing else that's really moved against the yen. But all the yen pairs, it's kind of sitting there neutral at the moment. So if Aussie was to pump or dump, it will just do that or that. So you kind of have to focus on the other currency, but at some point they will probably intervene again, or they will kickstart something from a fiscal perspective that will drive the yen stronger, because it's been weak for such an unbelievably long time. So I'm looking basically for shorts on everything. But as I say, at the moment, you're not going to get any signals on anything really, because it's just not moving. So look at the Aussie yen, CAD yen. CAD obviously has moved off the back of the weakness, but that was the last intervention that you had there. And as I say, when we're getting to these highs now, Bank of Japan are intervening. Yeah, they're driving this thing down. So any extensions to the upside, potentially you can take shorts, but as I say, you're going to be hard pushed to find any RSI extensions to the upside. So you could always take yesterday's high or a previous week's high short, try and get in there. But I just don't. I want a setup on the yen at the moment to be a really good setup. This is all just sideways, so I don't just want to take a trade because it's at a range high, because that will be the one where we suddenly get some news out of the Swissy that pumps it or something like that. And I just want to set up on the yen. So I'm sticking to my guns. I'm not trading the yen at the moment just because I haven't got a bias on it. And the only thing I would ever be interested in is a short, because when the Bank of Japan intervene, as you can see, that happens. And the only thing I can see them doing in the future is intervening. So I don't want to be long on it, because it'll be sod's law that you're in a long when that happens. And the next time that happens, it could do that. So I'm just playing it safe with all these yens at the moment. Pound yen, obviously today, if you wanted to take one, take a long there and a short there, it's going to go one of those ways, isn't it? Probably. But only because of the pound. New Zealand yen, I have taken trades on the New Zealand yen. You see, I took this one here. That was an hourly extension. Why did I take that one? It's just too good to miss, I think. Yeah, it was an RSI extension on the hourly. But yeah, I mean, they're all sort of stuck. So the reason the intervention came, the first intervention, second intervention, was because of this 150 level on US dollar yen. The main focus for the yen is the US dollar, because the majority of the yen exports, Japan exports, go to the US. So they need to keep the US dollar under control. Otherwise, they are starting to make a lot less money on everything they do with their exports, which is obviously bad for the economy, which is also obviously at the moment bad anyway. So they intervened again when we got to the 150 area. That intervention is the one that held. So, and since then, obviously, we've had a weak US dollar. So any kind of pushes back up into this area, there's going to be a further intervention coming. So, again, if we start to increase, potentially they could step in and drive it back down again and send a firm message. Knowing the Japanese, they won't, though, because they just don't. They talk about it all the time. But yeah, I don't know. We'll see. But I'm steering clear of the yens at the minute. So that's all the yens covered. Aussie New Zealand, I'm long. I got caught in a long. You can see why I longed it. Pretty obvious. I got caught at the end of the range, unfortunately. I longed the 72 bounce, and it decided, Australia decided in their wisdom to not increase their interest rates. And New Zealand at the same time went, yeah, hey, we're going to really increase our interest rates. So obviously I got in the exact pair at exactly the wrong time when a fundamental shift happened. And I'm in a squeeze and being squeezed a little bit more. So yeah, I'm still in this one short. If you're not in it short, I wouldn't get in it short. If you're not in it long, rather, I wouldn't get in it long until we get really extended. So down at these lows, I think from where we are now, we've moved such a long way down on this. We will probably now go into a little bit more of range-bound activity, which we quite often see on the Aussie New Zealand. This is exactly the same as kind of like I was saying with the Euro Pound. If you're going to trade anything, probably don't trade that one. This is the one that you shouldn't trade. I just made so much money out of this range buying it. I got stuck in the I love the Aussie New Zealand gang, and it stung me. But I think probably what we're going to do now is go into a fairly wide range on this, because the Aussies will be putting their rates up again, and it will be a better interest rate rise than previous, because they won't do that again. So when that comes, we will start to get buying into the interest rate decision. They will buy into that basically, so they will forecast in an interest rate rise. As long as the inflation isn't too high, we should get some push on the Aussie. So I'm not really too worried about it. I'm 125 ADR as a target on it to get break even. If I had another positioning down here, that is going to come down and I'll be out fairly quick on this. So I'm not too worried about it. But if you want to get into this, obviously right now there's no point in getting in. But if we do get extended on the 4 hour, worth having a look at. If we get extended on the hourly, it's probably worth having a look at. By the time we get extended on either of those, you're going to be down at the lows, in which case that's where you want to be buying. This was a beautiful wick-off spring example. So we came down, we moved into a range, we got the wick-off spring, we pushed up into an accumulation, dropped and pushed. But since then, we've gone nowhere. Normally what you would see is then the sell cycle turn into a buy cycle, but we haven't got that. So we're just sideways at the minute, which would indicate we're more likely to go into a range. So just buy the lows of the range at the minute. It might just go from where it is, I don't know, but it's just not worth trading at the minute if you're not in it. Aussie US, looking for shorts. So US dollar weakness, unlikely to sustain this weakness. So waiting for the US dollar to power up. I don't know what we're waiting for, to be honest. I mean, we've had a little bit of strength starting to show on the US dollar, i.e. in the form of an accumulation, not a drop. But yeah, not really going anywhere at the moment, the US. So Aussie is weak at the minute, starting to strengthen up a little bit, but it's not going to be as strong as the US. So again, you know, we're above the 72. Be looking for next leg. No reason why in the current climate we shouldn't just continue business as normal. Obviously into next year, into early to mid next year, and then we'll see what the interest rates and inflation figures are doing. And then from there, obviously, we can readjust. But right now, we should be looking for US dollar to start to beat everything until otherwise said. So CAD Swiss. Swiss franc obviously moves in fits and starts. We get these big, strong pushes. That was the interest rate change on the Swiss franc, what we weren't expecting. And since then, it's obviously been nice and powerful. But it goes in, you know, splurges, basically. It's the only way I can really describe it. Nicely extended at the moment. It's a counter trend short. These are the ones you want to be looking at taking at the moment. Because we're obviously in a downtrend. So I'll be looking for short opportunities, CAD Swiss, if I can get them. If you want to drop down to lower time frames, there's some very nice propulsion gaps as we looked at to aim for. So if we can get any good pushes up towards ADR, it's worth scaling in a short potentially from up there. So pushes up, wait for reversal alerts and drop down from there. CAD Yen. So I just wanted to quickly see. We're struggling at the opening range low at the moment. We are still bearish, but we're struggling down here. what I'd kind of like to see is a little bit of an accumulation and then a good, solid, strong flush and break. So I don't mind it flip-flopping around here for a bit as long as it doesn't pump. CAD yen, covered. Swiss yen, same thing, sideways. Not interested in anything to do with the yen at the minute. But, you know, if you are interested in the yen, what I would be interested in is things like that. Yeah, so you know, it's just if you want to get into some yen, get some exposure on the yen, you know, just set alerts up at range highs. You know, just stick some alerts up at the range highs and get in up there. Oops. And then yeah, assume that we're going to stay range bound basically on all of these. But you can see, you know, since the intervention, it's so clear that they put the brakes on basically. Yen weak, intervention, shock, intervention. All right, yeah. It's like, you know, you're looking at a woman in a bar and she slaps you and gives you a bit of a warning, and then you start staring at her again, she slaps you again, you turn around and walk away. It's basically what's happened, isn't it? The yen. They've gone, wait, no higher. I said no higher. All right, sorry. The market's gone, all right, I'm sorry, yen. We're not moving anymore. We're stuck. So it's going to take something pretty substantial, bad news-wise, I think, for anything to pump the yen now. That was a really bad analogy, wasn't it? Sexist analogy. Not that I've ever been slapped at a bar, but hey. And yeah, and the only person in chat that responds to that is Seymour Minges. Good. Euro odd. So moving on to the euros. Euros are a real tricky beast at the moment. We had all this buying into the rate announcement. So the euro's been on negative rates, zero rates forever. And they suddenly have now put their rates up, which is obvious. Everybody's got to put their rates up, otherwise inflation's going to run riot and their countries are going to collapse. So inflation's risen. We had the lovely buying spree on the euro into the rate announcement. And the euro was a little bit strong after the rates, but has since then flattened out. So if you look at all the euros, we've had the pump. The CAD obviously has been massively weak, which is why that's pushed. But you know, with all these euros, we've had the run and we're sideways. We've had the run kind of in there, the muck up there, but the sideways, sideways stroke down, and obviously this one's pushing because it's the US dollar weakness. So US dollar and CAD are the only things it's made any ground against. So it just tells you that the euro is now back to where we were from previous, which is the whipping boy. No strength, no weakness. DAX, doing Armand's just closed out his DAX for 1%. Good job. Done for the day. That's it. Exactly what you need to do. Get in, get out, get your money, run. If you can be done by half an hour to an hour into the session, awesome. Good job. Just about to get a reversal alert. So structure break on the DAX. Thinking about it. It's amazing how many times these support rectangles work. I hate it when we're in a support rectangle, because just see it do that so many times. And this is why we use this candle. The last sellers before the rally, yeah. These are the last losers, yeah. So you think everybody that's shorted here in this candle, this last sell candle, has their stops there. The buyers took over, all these sellers puked, which caused that massive spike. So when we get back down to this area, the people that sold here previously are unwilling to sell. The people that started this rally are interested in adding. And this is why the support rectangle holds. Yeah. if we break down below where these sellers lost out last time, it means the sellers are now in control. And that is why we have a structure break. That's a market structure break. That's what's going on underneath the hood. These sellers have actually gone, no, we're taking control back from the buyers. We're short. And that's why we use that last down candle before the push, because this is the defense area where the battle takes place. And this is why we see accumulation in support rectangles and pushes out. Anyway, euro odds. So yeah, euros. I'm really undecided on the euro at the moment. I haven't really got much of a bias on it. I still want to be short euro because the economy is still in trouble, as it is everywhere at the moment. But the other thing that makes me want to short this is we've still got this conflict on the doorstep, and we saw, we saw what happens when something potentially flares up with the Ukraine crisis. Yeah, there's your rocket. That's where the DAX fell. Yeah, so we actually yesterday. Sorry, that's not the rocket. It was M15. That's your rocket. I was going to say I thought it was bigger than that. Yeah, so this was the rocket landing in Poland. Bang. This is why I want to be short. There's a conflict on the doorstep of Europe, and at any point that can flare up. The economy isn't doing particularly well. We're entering into winter, where a lot of the economy of Europe is tourism based. We don't go abroad for sun in the winter. The economy starts to shrink. The seasonal businesses don't make money. So we're entering the area where the Eurozone tends to start to contract a little bit in the middle of, or in the start of a big recession with a war. I don't really want to be longing the euro still. Even though we had this big, strong push, I'm still bearish on it. And I think everything else, when it does pump, like if we get a little bit of a pump on the Aussie because of interest rates or something, it's going to be held strong enough to push the euro down. So I'd be more inclined to take any bearish stance still on the euros. We are up above the 72, but you can see we're not really making any headway at the moment. We had the buying into the interest rate, and this was the first rise. So rightly, the market was like, yay, they're going to do something about it. But it's not strong enough to get on top of inflation at the moment. They're still behind the curve. So we should still see them contracting. So I'm looking for shorts there. So any opportunities to get in short. Euro CAD is a good opportunity at the moment for a short. I think I've already got exposure on. I'm Euro US short at the moment. I was Euro Swiss short as well, and I closed out my Euro Swiss. So I was double exposed on the euro, and I'm out of one now and banked. So, but yeah, that's a lovely looking short opportunity there. Let's look at where we got to. So we're double topping at the minute. Not particularly important area. This is where I'd be looking if for any reason we managed to get up to here. This is where I would be very interested, which is 300 ADR away. But equally, we're extended. We're double topped. We've put a Batman in. Whoops. Yeah, so it's looking like we should really be starting a downward move from here. But again, we're waiting on some CAD strength and US strength, which is at the moment not really there. God. See what I mean? Just holds. It just holds. Holds. In fact, I should turn wicks to the left off, shouldn't I? This is why I keep wicks to the left on as well, but come on, brain. This off, yeah. Oh, I got Grissom over on as well, yeah. Anyway, so we didn't get that strong break to the downside on that one, unfortunately, not quite. EuroCAD, yeah, like it as a short. We have just taken out the liquidity at yesterday's high. not yesterday's high, sorry, last week's high. Or is that's actually this week, isn't it? Yeah, so that's Tuesday's high we've just taken out. And we got a lovely reaction there, not gone anywhere today. So break of the Asian low, potential short, reversal alert, short, drop down to lower time frames. We've had your reversal alert and retest, but we haven't gone anywhere. So it's all starting to stall out, 4-hour extension. So all looks good for shorts. Euro Swiss, same thing. Swiss franc obviously goes in fits and spurts. So we get these big, strong pushes on the Swissy. As you can see, got just waiting for Swiss franc strength to come through. The next batch we'll just send it down. Extension was here, first one. You see, this is where I got stuck on my Euro Swiss. I was in Euro Swiss from here, wasn't I, somewhere? So yeah, we pushed up. I got in way too tight on this. I was too aggressive on the Euro Swiss. And I got caught out. Came out of it okay. I think I lost about $200, didn't I? About 2 or 3% or something. But yeah, looks good. Euro Swiss for shorts. Still like it short. Not extended on the 4-hour. Dropped down to the hourly. We had an extension yesterday. That's the one I took Tuesday. Yeah, so any hourly extensions I should be getting short on that one. Euro pound, just ignore it. If you want to get in it, but I wouldn't get in it today, obviously, because you've no idea what's going to happen today. Could go absolutely anywhere today, couldn't it? Euro yen covered. Euro New Zealand flatlined. Moving averages 72 is literally flatlined. No idea. This thing, you could flip a coin. Depends what the New Zealand does next, doesn't it? Really, it's just no way of trading that. Euro US, I'm already short. We've just got RSI extensions on some of the hourlies, some of the 4 hourlies and the hourlies. No, sorry, only hourlies. Pound CAD and pound Swiss are extended. The hourlies. We'll look at those in a sec. Euro US dollar short. So we've had this obviously weakness off of the US on the news last week. We're contracting nicely at the moment. I'm just waiting for some US dollar strength to come through. Depending on what happens with the autumn statement, we might get that euro weakness come through as well. So, or strength, don't know. But in it, short, just waiting. So we had a lovely extension on the 4-hour. We got extended and then we pushed up. So you can see I got out of that one there. And then I got in again on this push and I got in one there, got out, got in, got out, got in. Just going to keep doing the same thing, wait for this to come down. Oil's had an interesting morning, is it? That's all the euros covered. Dropping again. We just had the Azerbaijan production figures come out, which are stable. That's probably what that is. Pound. So all of these, I'm not going to go into any detail on this because I have no clue where we're going. Just got the reverse alert on that one in third position short. Wider stop on that one. Trailing now on the first position. So yeah, pound, I mean, there's no point in me forecasting anything on this. I've no idea where this is going. It's all going to be decided by lunchtime, what's going on with the pound. So wait and see. At the moment, as I said, I've been saying for a couple of weeks, haven't I? We're not going anywhere until the statement comes out. So we've been sitting sideways for 3 weeks because it was the 17th of October where we were meant to be getting our announcement on the autumn statement on the fiscal policy. They decided to push it back. So, we can't go anywhere, can we? No one can There's no speculator, no pension fund, no hedge fund out there that can take any kind of directional bias on this, because it has got no inkling which way it's going. So we're sitting sideways on the pound, and we're going to stay sideways on the pound until the fiscal policy comes out later. So all these pounds, do what you like. If you want to get in, get in. Go long, go short. I don't know. It's going to go one way or the other, isn't it? So if you're already in it, good luck. Hopefully it comes down. My bias is short on the pound at the moment. My bias has been short on the pound for ages, because the pound has been coming down. Then Liz Truss took over and actually screwed everything. Since she screwed everything, no one's got any clue, have they? So the interest rates are going up at a good rate. Inflation is going up at the fastest rate in the world. We're at 11% now, inflation, which is astronomical. We've got huge tax cuts coming. We've got local councils going bankrupt because they haven't got enough funding. We've got Jeremy Hunt coming out today saying he's going to cut funding. The economy is in tatters. If unemployment is going to start to rise, housing prices are starting to drop. It's not good. And I can only say this because I live here. So from my perspective, there's nothing that should be going up in the pound. But obviously today he could change all of that. So we will see what happens. DAX is just about to break the pre-market lows and on its way to fill. So yeah, I'm short bias on the pound still, but obviously that might change today. So you just basically, you just got to play it by ear with all these. So there's no point in giving any inkling on any of these, because we just don't know, do we, what's going on. So wait and see this afternoon. New Zealand CAD, I'm short. Canadian dollar strength I'm waiting for. New Zealand dollar has obviously been very weak. They've done very, very well in the last couple of months. They've done well with inflation. They've done well with their interest rates. Manufacturing's been up. Everything's just been going well in New Zealand, as they did in COVID. They got on top of COVID fast. They locked down fast. New Zealanders just do it. They sort it. Unfortunately, they're a tiny little economy, and everybody else tramples on them because they're bigger. So you tend to find the New Zealand dollar isn't the strongest currency out there, but it's doing well at the moment. And if you can do well when everybody else is doing bad, obviously you're going to do well, aren't you? But any kind of strength in the other bigger currencies, the CAD, the pound, the euro, the US, we're going to see a drop. So I'm shorting it, and I'm going to stay short at the moment on everything. Not long term, just want to get out, make some money on extensions. It moves very, very nicely. It's a very, the movement on the New Zealand CAD, on the New Zealand everything is nice, because you've got an Australasian pair against a European or a US based pair. So you've got something that moves in Asia always trading against something that moves in London or in New York. So the New Zealand dollar is always more dormant when the other currencies are alive, which is why you get this lovely push, pull, push, pull, push, pull, because you've got different sessions fighting against each other, and the same with the Aussies. So they're just nice moving pairs. But anything extended to the upside against the CAD, I'm going to short it. Anything extended to the upside against the Swiss franc at the moment, you'd be looking to short it. So good opportunities to get in. Obviously, shorts, you had one started here, second entry out there, got in, waited, out. So just take any shorts. New Zealand US, again, same thing. I'm in the New Zealand dollar CAD. Nice M pattern reversal starting there. We need to break that support, which held here. Zoom in so you can see what I'm talking about. Yeah, so pushed up, accumulate, break, support, 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 support. When we break that support, we're coming down either to there or potentially to double bottom into this propulsion gap here. So just waiting for a break, basically. Again, waiting for US dollar strength. We're waiting for US dollar strength across the board on so much stuff at the minute. But yeah, looking good for shorts. getting that one actually just had a reversal out on the hourly on that today. So you can get in that one. Nice push, 2-day accumulation, break. But as I said, we haven't managed to break that support. So this is actually what I would do here. I don't think you're going to get one on M5. Yeah, you just had it. So I was going to say what I would look to do here, it's coming down pretty hard, so you want to get in fast if you're going to get in it, is this low here. Obviously, we tested it, rejected it. So if it breaks that low there again, we get a new lower low. You've got market structure reversal, haven't you? So I was going to say you can wait for a pullback, and then if you get an M5 reversal, take that short, which you've just got. Just about to get one on M15. So if you want to take M15 and then add, if you want to get in there, add, because if it's coming down, if it's going to break, it's going to break, and it's going to break probably substantially. So that looks good for a short. US dollar CAD, I'm already long. Already banked some on this. Had one here. Why did I take that? Must have been an hourly. Oh, yeah, it's an hourly. Hourly long. Scale in and out. In again and out. It's just long, basically. US is always going to tank and pump against the CAD. So, yeah, just looking for longs on it. Yeah, whenever you get any movement below the 72, it's rare that it doesn't push back. Yeah, it's the US dollar. So, longs US CAD. US Swiss absolutely caned. Swiss franc power up at the same time as the US dollar collapsing equals huge move. Obviously, we know when the Swissy goes hard. It just happened to go hard at exactly the same time as the US. So yeah, we had big drop on this. We just got a reversal down here. So obviously the brakes have been put on. But you know, the US dollar is not strong at the minute. We're waiting. If the Swissy has another pump, this thing's going to come down again. So I'm not trading US dollar Swiss at the minute because of the price action. It's just like a roller coaster at the minute. It's really difficult to trade the US Swiss. And as you can see, it's just actually in a big sort of contracting sort of range at the moment, expanding range, if you like. So this double bottom here, which is being bought up, I suspect this is probably going to hold. But if it doesn't, if the US doesn't power up for any reason, if we do get more Swiss franc strength, you're going to find yourself in a little bit of a problem because you've got this big balance here where we were quite happy to conduct business for a long time, and it's not really any way of knowing where in here is going to act as any kind of support. So you just, if this fails, you just got to scale in down to these lows and wait for that bounce. Obviously, if it gets all the way down to here without any kind of profit take, it's going to be ready to go. But it's a tricky one to take at the moment. I'm more comfortable in the US dollar CAD than US Swiss. And this thing's beaten me up so many times. It wasn't last Christmas, it was the Christmas before. I got into a right mess with this. This move here. Yeah, so I was buying up here. And what was it? I know it's here, wasn't it? Just in, yeah, November, it was there. I was buying up here, buying this double bottom up here. Because we'd gone basically, you know, this was obviously holding very nice. We pushed up, new market structure, was looking for a bounce, holding. It all looked like it was holding. So I bought this. And then Swissy went nuts and it just pushed. And we scaled into this. I got out here with aggressive positions on that. Just got out before it dropped. And then it went mental. This was Christmas. This was literally, it was the week before Christmas, wasn't it? I don't know if any of you, I don't think any of you were here. Not sure. But yeah, it's a week before Christmas I got out. Literally Christmas Eve just before I got out. But, you know, this is what happens with the Swissy. If the Swissy wants to go for it and the US dollar has a weakening, and this was because of the Santa rally. Yeah, Santa rally happens, US dollar weakens. And this is why I'm a little bit skeptical for the minute, because we quite often get the Santa rally, don't we? If we're going to have that, we're going to have a weak US dollar going into December. We don't know. This year we're in a bear market. It's all different, isn't it? We're in a bear market at the moment, so it's quite possible the Santa rally isn't going to happen. In fact, I'm banking on it. I want to go short. So yeah, we'll see. But it's in a lovely spot. Look at the extension we got on it. We were down to below 10 on the RSI. You know, we don't get this level on the RSI. Look. That's the last time we were there. 2000, that's COVID in July. 2020 was the last time we were down here. Look at the bounce. But then look at, well, this is COVID. So, I mean, it's a little bit of a different situation, isn't it? We're not in COVID at the moment. But we are at the start of a recession, you know, so who knows? The Swissy is one of those currencies you just got to be very careful of, because a lot of money goes through the Swiss banking system from all currencies. And when you push money through the banking system, the Swiss powers up. So it's just a little bit of a, you know, do you know what I would do with this? The best play on this, I think, at the moment is to go long here and use a stop. If we're going to break back down below this 10 level, I don't want to be anywhere near the thing. So take this 4-hour reversal alert long. Look at how far we've got potentially to come back up. Yeah, it's a big old recovery back up to there. And there's no reason why it shouldn't do it. It's done it all the other times. But if you break back down below there, you want to be out. So this is kind of one of those rare occasions where I would probably use a stop. And it'd be one of those where I'd probably look to scale in on every break. Yeah, so get in, get out. That's the sort of play on that one. But yeah, I mean, it's reversed at the moment. We've got some decent strength going through. At the minute, it's holding. There is a possibility that they will come down and take that liquidity. We've got Philly Fed tomorrow. It's the only news we've got in the US. Coming up now, Philly Fed tomorrow. So, I know. But yeah, lovely. I mean, this propulsion gap's beautiful. Look at that accumulation break. It's a massive target. US dollar yen, don't know. Gold, again, I don't know. A short, I mean, I've been calling this short from here, but then obviously we had the US news. So, yeah, not really. I mean, you just had a reversal on the 4-hour, massively extended on the 4-hour and embedded. It's rolling over. Hourly extensions, you've had multiples. You see, this is where I got into gold and I got scared. I'm so glad I did get scared. I hate gold. I just can't stand this thing. It just does this nutty stuff, and it's just not a position trading vehicle. If you want to trade it, scalp it or swing trade it, but use a stop. This thing, if you get the wrong side of it and it gets cross, you can get really hurt. You know, this thing just goes nuts. Just don't like it from a position trading perspective. It's a lovely vehicle to trade with a stop because it moves so fast. You know, you get on the right side of one of these, you can make a fortune, which is why people love it. You know, you can make a lot of money fast. You can also lose a lot of money fast. But where we are at the moment, you've got to be saying to yourself, with what's going on with the gold embargo on Russia being locked away, yeah, it should be coming down, I think. I mean, it should be going up. You know, the laws of supply and demand say we've got restricted supply. Demand hasn't changed. Therefore, it should be going up, shouldn't it? But it hasn't been. Since the Ukraine crisis kicked off, it's just been doing nothing but come down. So business as usual, I reckon. But yeah, Seymour's looking for a sustained move below 1750. Yeah, so I mean, the best play on this would be to take the retest on the 4-hour reversal alert. So we've got the reversal alert, which has just happened. So if we can get a push down below this low and a retest, take the retest. and use a stop. I would. Again, this is something I'd use a stop on if I was going to trade it, but I don't. Interest rate increases normally also bad for gold. I don't know. I don't really study gold. I don't pay much attention to it, but yeah, I mean, if that is the case, then obviously interest rates are not going to stop going up. The Fed is still going up. Everybody's still going up. Interest rates are going to go up into next year, potentially into 2024. I don't think they will go up into 2024. I think we'll have a stabilization somewhere towards the middle of next year. It all depends how, it's impossible to tell. It all depends how quickly inflation starts to flatten out as to what happens with interest rates. So, but certainly if this is driven by interest rates to the downside, obviously, we know they're going up. The Fed have said it yesterday. Euro said it yesterday. Everybody's no one's shying away from the fact that interest rates are going up. And they are going to continue to go up. It makes me nervous that businesses are facing a lot of wage growth, which will keep inflation high. If inflation is kept high, interest rates go up. Fed's Waller, rates have a long way to go and will require increases into next year. Yeah, so nobody 50 basis points. Nobody's shying away from the fact that interest rates are going up. They will continue to go up. ECB officials may favour a 50-point hike rather than 75 going up. Yeah, it's not going to stop. We are just getting into recession. We're just getting into it. We haven't seen this is like an iceberg, yeah? People are talking about a recession. You haven't seen what's underneath. This is just the start. It's not going to be a good year. But anyway, it is what it is. Which is the beauty of our job, isn't it? I don't care. I really don't care. As long as stuff goes up and down, I make money. That's all I'm interested in. Stuff doesn't. The only way I'll ever have a problem is if the market flatlines, i.e., we stop buying and selling stuff. If that happens, basically we're in The Walking Dead, aren't we? Economies collapse, society's collapsed. As long as society's still there and people want to buy stuff and sell stuff, we're going to make money. It's the beauty of our job. We're recession proof. I make money in a recession. I make money when I'm not in a recession. It doesn't matter. Stuff goes up, stuff comes down. Which is why this job is so good. Well, it's obviously got bad points as well, but overall, we're pretty sustainable, aren't we? Okay, so we've got the break of the pre-market lows. We're just having a little bit of a pullback at the moment. Gap fill still 35 pips away. So this is the runner position. I'm tempted to add a second runner. I fancy the lows today. The thing that's giving me a little bit more of a short focus on this is what happened to the Dow yesterday. What's happened to the Dow this morning? Let's have a look at the Dow this morning. It's coming down. This yesterday was just, oh God, I'm so glad I didn't trade the Dow yesterday. So glad. That's an account blur. You know what I was saying yesterday about the prop accounts and how you make money in trends and how you struggle in rotation chop days like this to make money. And this is, what happens. You'll have a good couple of runs and then you'll have a couple of days like that. You'll get chopped about and that's it. Your account's blown. This is an account blur. If you were risking 1% yesterday on a short there, you got stopped out. If you decided to take a breakout long, you got stopped out. If you saw this whacking great candle and went short, immediately you came back and it stopped you out. So you went long, you took that and it came back down and it stopped you out. You took that breakout up there, stopped you out. Those tweezer tops, short, tick. That's probably the only trade I think I probably would have taken yesterday that worked. But if I hadn't have taken profit and I'd have gone for a break of the lows, it would have come back and stopped me out at break even. Yeah, it's just hell yesterday. Horrible, horrible, horrible session. And the fact it's done this, the Dow, you know, this is the New York session. Its range in the New York session was smaller than the Globex when the bots are talking to each other. This is ready to go. And I think New York today, the Dow is going to go mental in one way or the other. And the fact that we are stalling, you know, the fact that we are stalling at the highs, yeah, and on the daily, we are at a point where we're about to break market structure on this, meaning that this bear run is in effect stalling at the start of a recession. I just can't see it. It just all screams, this is it. I don't know. I might be wrong, but it just looks to me like today we're going to get a monster move. But anyway, we'll see. We'll see. But hence me obviously having a very strong short bias this morning. Who knows? Anybody got anything else they want to cover or discuss, or questions about EA, anything? Oil's gone nowhere. I think I'm quite surprised we're getting this movement actually ahead of the autumn statement, but I suppose it's the DAX, it's German stock market. Doesn't get that much affected by what we do, does it? I don't want to take some profit on this. This is stalling a little bit. Don't want to leave it all on the table. I'm going to close one out. I'm going to close that top position. We might get a bit of a pullback. If we're going to go into a trend day, we're going to need to pull back. We might obviously in a trend day, you either get that kind of trend where we're pulling back to support resistance, or you get accumulation drops. So, you know, we're either accumulation dropping, in which case you take a breakout short, or we're going to pull back in which case you take a, you know, this is where your fib comes in. Yeah, your fib's great in a trend. Otherwise it's useless. But if we are going to trend, something like that is where I would look for additionals. And obviously when you're thinking, where shall I put my stops? You know, if you want to reduce your risk, you know, dropping your stops a little bit above the 61.8, you're just reducing that little bit extra risk, aren't you? Yeah. If it breaks back above the 61.8, we're going into a rotation, aren't we? In which case I'm wrong. I want to be out. Do you ever use the EA in set and forget mode? Yeah, it is always in set. It is set, and I've forgotten about it. It's running on my VPS. When my VPS loads, there you go. It's running on all this lot. It is set, and I've forgotten about it. It's getting me into positions. Which is all this lot. This is all taken by the EA. All this lot. Apart from the DAX. DAX I'm trading manual, and oil I'm trading manual. No, actually, well, the DAX I'm semi-trading manual. Oil I am trading manual at the moment. So you can see the EA is not set up on oil. It's set up on the DAX and those FX pairs, but it's not set up on oil. But yeah, I mean, it's in set and forget mode. But, you know, like I say, you can't forget about you put any EA you put on your chart, on your account, if you forget about it, you're nuts, right? This thing's managing your money. You don't ever stop watching it. I'm watching this constantly because I need to be aware of what's going on and I need to react. So the EA, like yesterday on Euro Swiss, yeah, no, Aussie Swiss, Euro Swiss, yeah, the EA got me in. Forget that one. That's a silly little 0.1 I took in the live room just to demonstrate a point. The EA took that and it got me out. Yeah, I didn't do this. The EA closed that. Yeah, the EA is set on Aussie Swiss. Why did I shut that down? Euro Swiss rather. The EA is set up to get in short with my normal risk. And it's told to get in at half an ADR. And it's closed, and it's told to get me out at 1 ADR. So if it drops by 1 ADR, get me out the trade. Yeah. And it did that. It's just, that's it. That's my version of set and forget. I think what you're thinking is, can I get the EA, set it up, stick it on everything, walk away, go and live on a beach and drink Mai Tais for the rest of my life and become a millionaire? No, you can't. There's no EA in the world that can do that. You can't do that. And you know, the reason you can't do that is because it doesn't matter how much you backtest an EA or how good your backtesting is, how good the results are. Those results are based on what's happened in the past. We didn't have COVID. Every EA that was running that has never seen COVID before blew accounts. We haven't had a war in Ukraine break out. Every EA that didn't know about the war in Ukraine blew an account or made a massive loss. You know, we're going into a recession. Has that EA traded through a recession? No, because you probably haven't got data going back long enough to get us into the last recession. So how's the EA you've backtested and is looking beautiful with forward testing, out of sample testing, robustness testing, Monte Carlo testing? Doesn't matter what testing you've done on that EA, which you should do all of that before you even look at putting it on a live account. If you've done all of that and it's never seen a recession before, it's not going to perform the same. So the EA in my EA is set to get me in based on my strategies. So it trades H4, M15, mean reversion. It trades H1, M5, mean reversion, in line with trend as well, if you want it to. You could trade ADR hits, scale into positions on ADR hits, in line with trend, if you want to. There's strategies out there which work 90% of the time unaided. Yeah. So yes, you can set these all up as I've got all set up on here to work. That's what the EA is doing. It's getting me into positions. It gets me in when the conditions are met and it scales me in as I want it to. But if those conditions change, I am coming in here and I'm looking at this and going, right, this isn't going as well as I wanted it to. I'm going to need to do something about this. The EA will just carry on doing what it's told, scaling me into oil in the opposite direction. Scaling me into oil, for example, looking for the next ADR hit to the upside to get me out of oil with a profit. If OPEC come out and say, we're not going to cap oil production and we've just found another 20 million barrels we didn't know about, oil's going to come down. I'm going to need to do something about it, aren't I? So I'm going to need to close out some of this using some of this profit. I'm going to need to do some aggressive drawdown control. I have to do that because I'm a trader. EA is not a trader. EA is a bot that sits on a chart and does what it's told to do. It has no clue what's happening with fundamental situations. It's got no idea whether you are comfortable or not with your drawdown levels. And that's a personal thing. No EA in the world can be told when you're uncomfortable. And that is when you need to manage your positions as a position trader. Only you know whether that's uncomfortable or not. For me, that's not uncomfortable at all. I can shut it right now, take it off of this and go, oh, well, I only made 19% this month. I'm not uncomfortable. If that gets to 7%, I'll be thinking, yeah, this isn't right. I might shut half of this and take a 3% loss and manage the rest of it. The EA can't make that decision. So you can only run an EA on full auto with rules on strategies that work. And I know these strategies work because I've been trading them for years, but they do not work on full automation 100% of the time. Yeah. So, you know, look at the signal on MQL5. I don't know where it is. But the EA, this version of the EA on IC markets, this is the MQL5 signal. You can't see. But it's done. This is running on full automate. I haven't touched this thing. This thing's been running for over a year. Yeah. This thing's been trading fully automated since the 1st of September 2021. I haven't touched it. Put 20 grand in. It's running on a demo account. Yeah, it's not a live account, but it's running on a because people always want to see, you know, how's the EA performing. Here you go. Have a look at it. This is one set file out of 24 billion combinations you can have in the EA. But people want to see something, so this is it. I can't show you what you want to see because I don't know how you want to trade with it. But this started with a 20k account. It's now running at 45k. Yeah, so it's done over 100% in a year. Fully automated, not touched it. It's lived through COVID. It's lived through the war in Ukraine. And it's had 42%, 45% drawdown on the account. So yeah, you can run it fully automated. It's running on all these pairs using H1M5 mean reversion set file. It's doing very well, thank you very much. But if it was me personally, I wouldn't have let it get anywhere near 40% drawdown. Obviously, I'd have intervened by now. But yes, it can. So, you know, there's not really an answer to that. It's and I get asked it all the time, and I can understand why, because everybody wants that EA that just makes you money, doesn't it? Don't they? Why exactly did you choose those pairs and what strategy? So the pairs I'm running are based on backtesting results and diversification. So these pairs all performed very well during backtesting with the lowest drawdown levels. Yeah, some of these drawdown levels were over 10%. Yeah, but they were better than others, and they didn't blow accounts when they were position trading. Yeah, so that's why I chose them. They're obviously the highest liquidity pairs, most of these as well. So you get a lot of push and pull. So they're good for mean reversion. And there's not a lot of overlap. So I've got US dollar exposure 4 times. I've got euro exposure 4 times, 5 times actually, euro exposure. But basically, they will not get overexposed at the same time. So I keep my exposure down. Are they set up for drawdown control? I don't know. Yeah, no, they're not. No, they don't do drawdown control at all. Basically, it's the H1M5 mean reversion set file. Yeah, so it's it's in there. It's in there, but it's the H1M5. M15, M5. Yesterday's high low. M5 hedging. M5. So it's this one. It's that one, but it's not running H4, M15. It's running H1, M5. So you can run this on either. It's basically, it's just a higher time frame RSI extension. Yeah, with a lower time frame reversal alert entry. So it's just, you know, it's extended on RSI. You drop down. So this is the 4-hour chart extended on RSI. You drop down to lower time frame and you take your entry. So this was tested on M15 and 4-hour, and tested on H1 and M5. So that's it. Crystal ball we need, which is why I'm selling my rented properties. Good idea. Making stuff liquid right now, I think, is probably a good idea. I'm toying with the idea. I've got a pension running. I can't draw my pension, obviously, but I'm toying with the idea of removing and stop paying my pension, because I have my own pension fund that I trade basically, which isn't running at the moment. But I'm toying with the idea of stopping my pension payments and actually putting those into an account, that money into an account, just to trade it, because I think liquid is the right way to go at the moment. How much is the EA? It's $199. It's on MQL5. It's all linked from the website. All the links you need are in the description of this video you're looking at now. All the links are down there. Having a bit of movement on EU. Yeah, a bit of downward movement on the pound. So this is US dollar strength by the looks of things. Yeah, we've got US dollar strength, which means indices will be coming down, which is nice. All going the right way. DAX is just about to fill the gap. We go, oh, you're kidding. Come on. I'm not having that. I'm closing that. I'm closing that one that should have TP'd. I'm not having that. This thing's going to go all the way up there now, isn't it? And I'm not having that. I've had that so many times. Miss my TP by a spread, and then off you go the other way. No, thank you. So this is my runner. So stop loss is above 61.8 retracement. Actually, that's not a 61.8 retracement anymore, is it? That's a 61.8 retracement. So stop is above the 61.8 retracement and that propulsion gap. So if we're going to put in our trend day today, this is my runner. I'm just going to let that run. It's either going to stop out with 0.5% or it's going to tank. I've made a loss on this account yesterday. Look. Bad. So I've made 1.4%. This was me trying to trade that stupid range yesterday. See, this is what happens when you try and range trade. I only took a couple of trades though, to be fair. I didn't milk it yesterday. So yeah, 1.48% this morning. And let this one run. Got some DAX profit. I'm going to hold my DAX. I'm just going to hold it all. See if we get this move down. So that's pretty much the gap fill done, I would say. So we'll probably find we get a pullback now. Automated DD control, no. I've used that set file quite a bit. Yeah. H1M5, H1, you know, it's my bread and butter. This is what I teach in the bootcamp. This is what we cover every day, isn't it? You know, this is what the dashboards are for. H4 RSI extension, drop down, lower time frame, enter on reversal alerts. Yeah, that's my bread and butter. That's what I do. That's what the EA is doing. Except at the moment, the EA is doing it on our hourly RSI extensions and M5 entries, because at the moment the 4-hour RSI extensions, as you can see, are a lot rarer, because although we're getting the volatility and the movement, we're not getting that strength of movement that gives us extended conditions on the 4-hour RSI, which is what we're used to. That's the only reason I've dropped down to H1M5. And obviously that's the set file that's been running on the EA for the last year and doing very nicely. Thank you very much. But, as this is what I intervene. I'm not the sort of person that can sit there and cross my fingers in 40% drawdown and hope it comes back. I need to make money each month. It's got bills to pay. But if you want to, if that's that signal that's running on MQL5 that's doing this, you can't see it because this is the 4K problem. 4K monitors have got a problem. And Windows, I can't shift this from 4K mode for some reason. But it's sitting in $1,700 a drawdown at the moment, which is 4%. Probably see it, actually. Let's look at the performance. How'd you get to signals? There you go. There you go, H1M5. I've got 3 subscribers, look. Didn't even know I had subscribers. So it's been running for 58 weeks. There you go, 94% algo trading. So I did intervene once. And I think that was when Ukraine kicked off. I took a couple of aggressive positions, which I didn't need to take because it all worked anyway. But it's 125% return. There's your drawdown. So that's Ukraine. March, there's Ukraine. We drew down to 15K. There's something. I don't know what that was. What was that? What happened in September? I don't know, something happened in September. But yeah, so we got 50% drawdown, 48% drawdown in Ukraine. We got 47%. Don't know what happened there. But this is look at the months. Every single month, without fail. And this is position trading. This is what we do. We don't make a fortune as a position trader, do we? But we make consistent profit because we don't let the market take our money. The dollar squeeze, was it? Yeah, that was a dollar squeeze, obviously, there, I guess. And this is the thing. So I'm exposed 4 times on the dollar. So that, and this is what I said. The set files that I've got running on these pairs, the reason these pairs have been chosen is because these pairs didn't get beyond around about 10% drawdown unattended. Liz Truss, that was what it was. Yes, of course it was. That was Liz Truss's stupidity. That's the pound, isn't it? That's the pound. It survived an idiot. It survived an idiot invading another country and survived an idiot trying to ruin another country. But that's why these pairs were chosen, because if all of them going to drawdown at the same time, worst case scenario I've looked at historically has been around about 10%. If you got exposure on 3 to 4 currencies at the same time in the same squeeze, you're going to get about 40% drawdown on the account. And that's what you get. Show me a pension that's returned 124% in a year. Doesn't happen, does it? But this is aggressive, so you get what you pay for. You want to make money, you need to be aggressive. Yeah, Armand, I want an ATM that I can just withdraw from whenever I want. Where's that EA? Yeah. Let me know when you find it. I've been hunting for 14 years. I've never found it. I've made some EAs that look absolutely amazing. I found the Holy Grail many, many times. over the years. I've found the Holy Grail, and I've developed EAs that just are amazing. And then you forward test them and they collapse. And that's when I discovered robustness testing. And unless you do robustness testing and out of sample testing on any EA, it's dead in the water. Which is why you see all these EAs. I can't show you because I can't see my feed. But you know, these EAs and these signals, they come and they go a lot. You know, a lot, because they're all back tested really well in MT4. You know, you come into the strategy tester in MT4 and you create these beautiful curves, which are absolutely lovely. And then market conditions change because they've never been back tested over those conditions and they collapse. Yeah. They don't know, they've never been traded at ATR over 15. Every single condition they met was ATR 3 to ATR 7, and then ATR 15 comes along and they go bang. Because none of these have ever been robustness tested. And they will last a certain amount of time and they'll blow your account. You know, so it just doesn't, they just don't work, unfortunately. Long term. Short term, yeah, which is why everyone thinks they found the Holy Grail. But you stick any EA, whatever they show you in the EA sales page, will be back tested over a certain period of time with a certain setting. Yeah, so they will have back tested it from 2009 to 2019, for example. Yeah. Take that exact thing and then back test it from 2019 to 2022. You will not get the results that you got there. Yeah. Take the settings they give you and vary them by 10% up or down. So if that's your normal settings, vary the settings by 10% up and down and see if you get anywhere near the same results. You won't. Slippage. They tested everything with a 2-pip slippage. Run the same back test with a 3-pip spread. I.e., you're going to get slipped by, you're not going to get that entry, you're going to get that entry. You won't get the same results. Robustness testing is so important. Everything I build, I test it over a period of time. I variance test it by 10% up and down on the settings. I then retest it over a new sample of data that's never been seen before. And then I do multiple Monte Carlo tests to test up to 200 different variations of everything. If it gets through that, I'll use it. Other than that, it doesn't work. Spread. I got a load of EAs in development at the moment, and they're all great. And some of them I use, but they're not the sort of EA you're going to make 5% a month. They're going to lose. They're going to have a losing month. Overall, in a year, they might come out with 5 or 10%. And that's what the banks use. Yeah, and that's why Warren Buffett makes 10% a year. You know, he doesn't make 10% a month because he's not that sort of trader, is he? Welcome to the world of spread. Dollar squeeze. Do you use alerts beyond previous days' high and lows you shared on YouTube? Personally, I don't, but other people do. I know other people do. Somebody posted actually in the Telegram group the other day that they were trading that strategy. So that one is yesterday's high low is a good strategy. This one, M5. So the EA basically monitors for any reverse alerts that happen above yesterday's high. So if you're looking at this on M5, obviously if you're looking at it on the hourly chart, what you would see is that liquidity run. On the lower time frame, you're taking the reversal alert above the high, assuming that this is going to be a liquidity run. Highs and lows. It happens all the time. We see it over and over again, don't we? There's one on the DAX here right now. Look. Oop. Yeah. Yesterday's high. Stop hunt. Drop. That was a drop because of the bomb, but it held. It's a liquidity run above yesterday's high. Look at what we've done today. The trade I took today, exactly the trade I took today, yesterday's high bounce. The market does it all the time. So if it pushes above yesterday's high, reversal alert, short it, because there's a high probability if it's pushed that far. First of all, you're going to be extended on the RSI, so it's going to need a breather. People are going to need to take profit. Everyone that's done that is going to need to get out. Secondly, anybody on a higher time frame that wants to take an entry will be looking for liquidity to fill their position. Yeah. So that's why that strategy works. Every strategy I build and I develop is all based around how the markets operate at a fundamental micro level. What is the market doing when it moves up? Buyers are entering positions. To get out of those positions, they need to become sellers, which drives the market back down again. We use indicators to tell us when the buying has happened and when there's been more buying than normal, because when there has, we know that it's going to come back down again. So every strategy that the EA is designed to trade is all based around the mechanics of the market rather than fancy arrows and anything else. It's just pure buyers have to become sellers, sellers have to become buyers, buyers have to become sellers, sellers have to become buyers. Market structure, it's everything. They're all doing the same. They're all the EA strategies do the same thing. Which one you pick and which one you want to use is purely down to you, but they all do the same stuff. ADR reversals. It's pretty much the same as the H1M5 set file. If you get an ADR hit to the upside, what's RSI going to be? Extended on the hourly, probably. It's the same thing. It's just another way of getting into the same trade, isn't it? Which is what ADR is for. It's all on there. All the strategies are also on the website here as well. Trend pullback, mean reversion, yesterday's high-low, hedging, ADR reversals. That's all I do. It's all I look at. Don't need anything else. We've stalled at the gap fill on DAX. So there's your gap fill done. So that would have hit my TP. I got out a little early on that second one, but yeah. So we are still bearish. Look. I'm just going to hold that second position. Do you use alerts beyond? How does your EA cope with non-farm payroll? If bad, any way to get out and pause at those times? No, don't get out of non-farm payroll. It doesn't cope with non-farm payroll. Non-farm payroll is just volatility. It's just normal. People try and, all these EAs that use news filters to stop trading around. And the only time the market moves and gives you an opportunity to make a profit, oh no, let's not trade that. Why? Non-farm payroll moves the market. Do you want to be in non-farm payroll or out of it? When the market is going nuts and moving a massive spike up or down, that's exactly where you want to be in when the market's moving. How do we make money as a trader? What's your job? To find volatile instruments that are moving so that you can benefit from those movements. What's the biggest volatile movement in the world? Non-farm payroll. Why not trade it? And if you're in a position the wrong way on it, so what? Look, I'm short on the DAX. Massive movement to the outside. So I get in again, wait for it to come back down again. What's it going to do? Everybody that's bought here, right, that hasn't taken profit yet, what are they going to do when they take profit? Sell. What do you think is going to happen when they take profit? The market's going to come down. So when it comes down, I'll get out. It's position trading. If non-farm payroll goes against me, I add. That's the job. I don't want to not be trading on non-farm payroll. If it goes my way, I make money. If it doesn't go my way, I make money when it does. That's it. And this is the whole conversation we had yesterday about stop losses. Yeah. I can understand the EAs that use a stop loss, i.e. the ones that give all the money to the bankers and lose all the time. I can understand why they wouldn't want to trade non-farm. But all the EAs that make money, I don't know any others personally, but mine basically wants to be trading around non-farm because it's a really good opportunity to enter a trade. Look at every non-farm. 90% of the non-farm payrolls do that. Yeah. So if you're getting anywhere on a non-farm spike, 90% sure you're going to make money. Why not trade that? Nuts, isn't it? If it doesn't do that on the day, it will do that over a period of the next couple of days. So don't stop trading. And obviously, my EA is designed for position trading. A lot of people trade it with stops as well. I mean, all the original strategies which taking a reverse alert with a stop under the low, taking a reverse alert with a stop under the high, those strategies also work. But obviously, the strike rate is less, and you're going to get stopped out a lot because if you put a stop in the market will take your stop. That's what it's designed to do. It's hunts, limits, and stop orders. So, using stops obviously will do that. But equally, if you get a reversal alert an hour before non-farm payroll, you want to be in that trade. You don't want to not be in that, because if non-farm goes your way, happy days. If non-farm doesn't go your way, fine. It's just another stop out, isn't it? There's no reason not to trade. I don't understand people that have these filters to stop trading around news. It's the most volatile thing that could possibly happen, which is why we look at it every morning. I don't look at this and go, oh my God, I don't want to trade around 11:30. I'd look at, right, how can we benefit from the 11:30? Because, it's like everybody wants the crystal ball, don't they? I want to know where the market's going to go, which direction, and I want to know when. We can never, ever know those two things. But we know one of them. We know when the market's going to move. We just don't know which direction. So why would you possibly not benefit from that? There's only two things that happen in the market. It goes up and it goes down and it goes through time. We know when one of them is going to happen. We just don't know which of these it's going to be. You've got a 50-50 chance of being right, haven't you, at a particular time? 11:30 today, if you hit the buy button and the sell button, you've got a 50-50 chance. Right now, if you hit a buy button and a sell button, it's probably just going to go like that. Use it. Don't stop trading around news. It's pointless. And don't forget, we are also trading high time frames. So I'm looking at the 4-hour time frame, right? Look at that massive thing that happened last week with the news. Yeah. Everybody is like, oh my God, you see the size of that move? It's just a big 4-hour candle. I'll just wait for it to come back down again. Doesn't affect me because the position sizing I'm using doesn't matter. Look at that DAX, right, that I got into here that has gone 350 pips against me on a 258 ADR pair. Am I worried about this DAX position being $149, $150 in drawdown? Of course I'm not. Tiny in comparison to the returns. It's just another little position I have in the market, which at some point, if we are going to stay in a bear market and we are going to go into a recession, and unless the Fed and Bailey say anything different, it's happening, this is coming down. So why would I possibly put a stop in the market to get stopped out constantly over and over again? What's the point? And the EA is designed to do that. The EA's job is to enter and scale. So it's told to get in, and it's told to get in and keep getting in, adding positions for me, distancing them 1 ADR apart, yeah, and ever so slightly increasing the lot size to bring my average closer so that when that profit take move happens, I'm out with the money. Yeah, bank $100. Every single time the market comes back in my direction, bank me $100. That's literally all this EA does. It waits for the market to get extended, and then it gets in, and it keeps getting in until the market profit takes. When that market profit takes, I profit take with the market. I just grab a little $100 out of it. Simple. Such a simple strategy. Yeah, all these strategies on in are as simple as you can possibly get. They use two indicators. They use an RSI and they use a market reversal alert. That's it. The simplest strategies in the world are the simplest. The ones where all these people you see with a MACD, an RSI, a CCI, 3 moving averages, supply and demand indicator, all telling you the same stuff. All you need to know is when's the market stretched, because when it's stretched, it's likely to come back. Mean reversion. I can prove it 1,000 times on every chart. Does nothing but mean revert. The market does nothing but mean revert. It pushes, it pulls, it pushes, it pulls, it pushes, it pulls, it pulls, it pushes, it pulls, it pushes, it pulls, it pushes, it pulls, it pushes, it pulls. It's all it does. All you need to do is get in when it's pushed and get out when it pulls. It's really, really, really simple. You know, the bloke that said, I don't know who it was, but some stock trader back in the 30s said, sell high, buy low. Why do you think he said that? Because he was a multi-billionaire stock trader, because he sold high and bought low. Nothing's changed today. We just massively overcomplicate it, don't we? We add all this stuff onto our charts to make it complicated. I want to know which direction's it been going. And if it's going down there, I'm going to get in and hope it carries on. If it doesn't carry on, I'll wait until it does. It's that easy. And that's all the EA does. It's an automated way of doing that. There's a lot more obviously in there. You can set it up to get you in at the right conditions. So, 4 hour, my EA here is set up on hourly extensions. Yeah, so when the hourly RSI 21 is extended above 75 or below 25, monitor the market, wait for a reversal alert, enter. When it's moved $100, exit. That's it. That's all it does. It can do obviously a hell of a lot more, but why overcomplicate it? All the stuff in here, yeah, it's because people asked for it. 90% of this stuff I never even use, but it's there if you want to use it. But most of it, I personally find, doesn't make any difference. Depends on what you stop loss. Yeah. So yeah, if you're if you're going to use a stop loss, your strike rate and what money you make is based on whether the market comes and hunts your stop or not, and you can't control that. So, is turning all filters in the settings would increase the win rate? Is turning all filters in the settings would increase the win rate? I've no idea. Go and test it. If you want to test the EA, go and download it from the marketplace. Download a demo, and test it. Stick it in. Look, just download a demo. Put it in a strategy tester. Test it. Whatever settings you want to use, test it. I can't tell you what the strike rate will be because I've no idea what the strike rate will be with your system, your strategy that you use with the EA. It's all dependent on the instrument, the time frame, the time period you test over, the settings you have, your stop loss settings, your TP settings. There's 1,000 combinations. There is no such thing as a strike rate. Every indicator, and I get asked this all the time. And it's not just me, right? What's the strike rate of your indicator? I don't know. Which trades are you taking? When are you awake? When are you asleep? What instruments are you trading? What time frame are you trading? Are you trading around news? Are you not trading around news? What's your confirmation indicator? There's no such thing as a strike rate. What period of time are you testing over? Do you want to know the strike rate for the last 24 hours or the strike rate for the last 24 years? Because they're very different. I wish people would stop asking stupid questions and think about the question. What's the strike rate of the indicator? How could anybody in the universe answer it unless you give specifics? What's the strike rate of the indicator on the M5 time frame on Euro US dollar from the 1st of January 2020 to the 1st of January 2021? I can answer that question for you. Other than that, Don't ask. Seriously. Sorry, I just get this question all the time. It just annoys me. But the indicator repaints. No, it doesn't repaint. It draws in market structure. If market structure is invalidated, do you want to know when the next market structure break is? Yes. Okay, then it needs to get rid of this one because it's not market structure anymore, is it? All these questions I get, and it all answered in the videos on the website. I spent 1,000 years putting together all of this free education, and all I get asked is the questions that are answered in all of this free education that I spent thousands of years putting together. But I'm the same. I've been there. Don't worry. I've been there. I've asked these questions. Everybody's got to start somewhere. It's just the same ones get asked over and over again. I need an FAQ section, and somebody said this before. I think it was Dion one said, I need an FAQ section. I do need an FAQ section. But if I send people to the FAQ section, they won't read it. They'll just ask anyway. What's the point in the FAQ section? I use the PASR with amended calculation based on the ATR rather than extreme points as my base signal point. I think you may have something similar. No, I don't use PASR at all. I don't use parabolic SAR at all. It's good as a stop loss. Parabolic SAR is a good indicator to use as a stop loss indicator. So yeah, I mean, I like parabolic SAR as a stop loss, but parabolic SAR is very, very similar to a moving average. They're all the same. They're there to stop you out when the market reverses against you. So, and you can use it as an entry indicator as well if you wanted to. I mean, it doesn't matter. We had this, we went into this in detail in yesterday's live room, didn't we? It doesn't matter. And I proved the point yesterday, didn't I? I proved the point on the DAX yesterday with these trades. There. I took that trade there and that trade there. And I said, at this point, I said, I have no idea whether this thing's going up or down. I have no clue whatsoever. I will hit the sell button and I'll either be right or wrong. I added to the position and I got out down there. I had no idea if it was going to go up or down or if it was going to get that gap fill. I had an inkling it was going to get that gap fill. I know 50, 60% of the time it does. But whether you'd used a parabolic SAR to get in, whether you used a moving average, a 6 or a 9 moving average cross to get in, whether you used a moving average to get in, whether you waited for it to cross the 20 before you got in, whether you used an RSI crossing below the 50, whether you used a MACD cross, it doesn't matter. It doesn't matter. Every indicator tells you the same thing because all indicators lag and all indicators follow price. Price moves first. Price moves first. The second thing to move is market structure. And that is why I use the market reversal alerts indicator, because after price has gone price action signal, we get a market structure break, and then we get your things like your moving average crossovers, all your lagging indicators happen after price action and after market structure. All you need. You need a condition indicator to tell you when there's an opportunity. You need a signal indicator of some kind to tell you to get in the market. And then you need to sit, cross your legs, cross your fingers, and hope it goes your direction. And if it doesn't, manage the position. Money makes people stupid. Yeah. Talking about the questions. I do get it. I've been there. I've been doing this for a long time. And I remember asking the questions I get asked, which is why I'm so tolerant in the Telegram group. And, people say to me all the time, God, you're so patient with these people. And it's like, I've been there. I've been there. Somebody asked me yesterday, every time I put your indicator on the chart, it resets all the settings to the defaults. How can I stop that? Well, you just have a default template, and every time you load a chart, it loads your defaults. And it's, questions like that, which are not even anything to do with the indicator or trading. They're basic software questions about MetaTrader 4. I don't work for MetaTrader 4. And, it's all, I can't remember what it was I said about the other day in the group. Somebody said, what did they ask yesterday? Oh, yeah. Lee, my Forex funds, is it available even in my country, the Democratic Republic of Congo, or is it only happening in Canada? Right. So the question is my Forex funds available to people from the DRC or just Canada? First of all, I'm not in Canada. Second, I'm not my Forex funds. Why not use this thing called Google and find their website and look the information up? Why sit in a Telegram group, ask a question, wait, I don't know, 10 minutes, an hour, or whatever for a reply, when you could just literally go to Google, ask the question, and get a response immediately? What did I do this morning? First thing I did when I got to my desk this morning is I went to Google and I went, what time is the autumn statement today? 11:30. I could have asked in the Telegram group and waited for somebody to look this up for me, or I could be proactive. The difference between people that make it and don't make it in this industry are the people that do things like this. I wonder if there's an advantage in trading gap fills on the DAX. Go and find out. Download the data. Do the work. Is there? Yes. Did I make money this morning because of this? Yes. Because I've done the work. Ask people. People have never heard of, let me Google that for you. Oh, it's just the most annoying thing in the world. And the other thing that annoys me while I'm on this subject, right. Yesterday, was it yesterday? Oh, wrong one. Right. I don't think this got asked in the Telegram group. It might have been, might not have been. But when this happens, right? Bang. Telegram group. What just happened to the DAX? I don't know. Why not go and find out? It comes up on this website within seconds. I look at it every day in the live room. Hey, the US dollar just went mental. Why? I don't know. Maybe it's something to do with a scheduled news event that was going to happen at 1:30, which I told you about in the morning, and you should be aware of every day if you're a trader. If you're not, you're going to die. But anyway, I wonder why the US dollar moved. For God's sake, people. Why is the US dollar moved? Oh, it's non-farm payroll. Oh. You're trading. You're using your own money in this thing called the market, and you've no idea why it moves. It's like saying, I'm going to drive a car and I'm not going to bother doing a license. You're dead. You're dead. If you don't know how the thing moves, you're dead. Which pedal should I push? I don't know. Why not try them? Press each one and see what it does. Oh, why wait for someone to tell you this stuff? Just go and find it out. Everything you need is on the internet. Everything. Absolutely everything you could need to know in the entire world is on the internet. If you want to become a plumber, you can learn how to become a plumber on the internet. If you want to lay a patio, you've never laid a patio in your life, Google it. Everything, every piece of knowledge. You want to become a particle physicist, it's all out there. If you want to become a trader, it's all out there. You'll get lost for many, many, many years. And I would suggest you start here rather than getting lost for many years and then coming to this. Start there. This is 14 years worth of everything I've learned condensed into 5 days. And I've just thrown everything away, basically. So, but anyway, use the internet. It's really easy to find stuff out. It's just a bugbear of mine. I got drawn. One of my mentors, Strat. He made. I've said this before on Forex Factory. His thread on Forex Factory is vast. Absolutely. I don't know what his I don't know what his thread count is now, but 6,800 pages. Oh no, this is not Strats. This is somebody else's. Hang on. There you go. 791 pages. This is just one 13-year anniversary, right? Strat. I was one-on-one mentoring with Strat. Right. First thing you got to do, is read this. He won't talk to you until you've read this and read this. 1087. Yep. So you've got to read these two threads, and then if you've read all of this, he will then start to talk to you. Do you know what he doesn't get? Stupid questions. Because everything you need to know to become a successful trader is in here. Right? And the one thing he taught me, which I am passing on, which everybody doesn't like because I'm passing it on, but is I don't spoon feed people. If you've got a question and it's so bloody obvious that you can get it on Google, I'm not going to give you the answer to it. Because if you're too stupid, you can't look something up on Google, you're never going to make it as a trader. I'm doing you a favor. Honestly. Spoon feeding in this industry is the worst thing you can get. Because what works for you and what works for me are not the same. So if I spoon feed you everything that I know, you're not going to become successful because you've got to find it out for yourself. And I really believe in that. And that's what he instilled in me. And to this day, I will do that because spoon feeding is just not a good thing at all. I love Imagify. I've never heard of that. What's Imagify? Imagify. Online and CMS compression made easy. Am I reading that wrong? I don't know what that is. My favorite site to send to colleagues when they ask stupid questions. Oh, right. Okay. Not heard of that. Google is where you send people. I get it. I know. I get it from my kids as well, and you can understand it. You know, they're kids. It's like, Dad, what's da 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 da? I don't know. Let me Google it for you and tell you. Rather than leave your room, come into my room and ask me the question so that I can look it up on Google. Why not just look it up on your phone? You know, we didn't have this when I was a kid. We're in a situation now where if I want to know the answer to anything in the universe, there's a whacking great boat at the moment, right? Just down the road, not down the road, but in Portsmouth at the moment, there's a huge warship anchored, and it's the biggest warship in the world. And I saw it on the news, and I was like, wow, wonder what that is. I went to Google and I put in large warship Portsmouth. First thing that came up is the General Ford or whatever it is, biggest battleship in the world from the US, is now anchored outside Portsmouth. How would I, you know, if somebody had said that to you at school 25 years ago, you wouldn't actually know the answer to that question until you sat down and watched the 6 o'clock news if they were covering it. There was no way to find out. Now I can find out instantly on Google. You know, anything to do with trading you don't understand, Google it. It's all out there. DAX just having a little bit of a pullback at the moment. We've got potential 3-bar reversal going in here. So stop loss to break even on this. I got a 600 point trailing stop running. In fact, what I'm going to do, I'm happy to take a risk on this, to be honest. So I'm just going to move that back because I think we are going to pull back, but I want to try and catch that run if we can get it. Sorry to let you feel irritated about my questions. No, I'm not irritated about your questions. No, Funtery, I'm not. Your questions about the EA are fine. Questions about things like win rate and stuff like that, you know, they're specific. Specific questions about stuff is fine. You can't find out specific questions, answers to specific questions unless the person that has the answer can tell you, or there's a way you can test yourself. A lot of people don't know you can go and download any indicator or EA for the market for testing the strategy tester. So that's not a stupid question. It's not something you can Google, can I get a demo? That is something you need to ask, things like that. But, things like, why has the market moved? Why has US dollar dropped? If you don't know the answer to that question, it's a problem, a fundamental problem, isn't it? Those sorts of questions. I have the course on baby pips bookmarked for every question about learning to trade. Yeah, baby pips is awesome. Baby pips is this course. If you're new to trading, this course, it's all free, totally free. There's a lot of it, but it teaches you all the fundamentals. But it teaches you all the bad stuff as well. It just teaches you stuff. There's some good stuff in there, yeah, but it teaches you what I would call the general consensus, yeah, how do you class it? What all the popular kids are doing, yeah. The popular kids don't make money, do they? We know that. You go to any broker, you see that 70 to 90% of their clients lose money. Those are retail traders. The ones that aren't losing money are the institutions trading with the brokers, and the funds. So this teaches you everything you need to know, but you need to go through all of this, and then you need to find a strategy. And what this will do is it will set you on the path to finding a strategy. This course opens up 1,000 doors into different strategies. You've now got to walk through 1,000 doors to find what works for you, and that is the hardest thing. And it also teaches you, obviously, to use stops and risk and reward. And but it doesn't tell you all the stuff that you'll find out. Like, yeah, it's fine using risk reward of, I want a 3-to-1 risk reward or whatever. It doesn't teach you, is it possible for a 3-to-1 risk reward to get hit? It's just, it doesn't. There's a lot of stuff it doesn't teach you, which you have to find out yourself. Which is why you've got to put in the chart time. Time watching charts is absolutely critical, in my opinion. You need to see this thing move, and when you see it move for such a long time, you suddenly go, "Oh, it's just so easy." When it's down there, I do that, and it's just stop looking for signals. Stop looking to overcomplicate. Simplify it back to the old buy low, sell high. That's it. That's what works. You just don't do it with 1% risk every time you do it. Good for making people disappear for a while before more questions. Well, yeah, this is the thing. People come in the Telegram group and ask questions, and that are so basic that you can tell they are new to trading. And I said, that's everybody's got to start somewhere. I don't have a problem with people starting trading. Obviously, you have to start somewhere. Send them to baby pips, but you'll never see them, guys. I've said many times in the Telegram group, go and visit baby pips, consume all of that, and then come back. They'll never come back, because this sends you off looking for the Holy Grail. All of this sends you off looking for the Holy Grail, which you'll never find. That's the problem with trading education. It all teaches you to go and find the system or strategy that gives you the risk reward. Number one cause of death. I mean, these are just so basic, isn't it? Position sizing. See, and this will tell you to risk probably 0.5% or 1%. Yeah, look. That's fine if you can find a strategy that gives you a 50% strike rate and a 2-to-1 risk reward. That's fine. I've never found it. So it teaches you to go off and risk 1% on every trade and it teaches you to do risk reward. Market doesn't work that way, does it? It's all just stuff that's, you know, setting stop losses. They eliminate the anxiety caused by losing. 100% disagree. They cause the anxiety of losing. Absolutely cause. It's the number one reason people over leverage, go tilt, blow their accounts, because the anxiety caused by getting stopped out 1,000 times in a row drives you mental, and it makes you system hop. It makes you do everything wrong. But I know that. That's how I feel about that. Scaling in, brilliant. Adding to winning positions. So this is all good stuff. But again, it's what this does is it sends you on the path of scalping, which is the hardest thing possibly to do as traders, is to scalp. It's all the education is great, but it just, I think just the way the focus, everybody gets pushed down this route of going just the wrong way to begin with. And I think it just people need to be pushed the other way. People need to be pushed into ability to bank stuff, room to breathe. No stop loss gives you room to breathe. It will always give you, most of the time, a reason to get out with a loss. It's just getting that room to breathe that's all people need. This is why it works. It's just it removes the psychology element. That's the bit no one can do, which is all covered in the bootcamp, obviously, which is all free. Go and watch it. Good for making people disappear for a while. Yeah, teaches you how to lose money to the banks like everyone else. Exactly. Yeah, exactly. It's not. A lot of people make money with stock. Well, I don't know if they do. I did. I broke even and I made some money using stops. I made a lot more money consistently. I didn't make a lot more money. That's a lie. I can make a lot more money using a stop loss and scalping than I can position trading. But I can't be consistent with it. That's the difference, isn't it? It's consistency. The only way you get consistency is on high time frames. So you're taking less trades, which have got more probability of working out. And in that case, you probably won't make enough money unless you've got a massive account, or you position trade and just take whatever the market gives you when it gives it to you. Speaking of giving it to you, I'm just looking at what I've got on the bank at the moment. Tempted to take a New Zealand CAD off and one of these DAXs off just to get some in the bank. The DAX, obviously, I can add back on again, which is what I did yesterday. Or do I leave it? No, I'm going to leave it for the moment. I've got some profit there, but again, this is what I said. If depending on how your week, your day, your month is going, you might want to bank some, stick 1% or so in there. At the moment, I'm quite comfortable with everything, so I'm going to let everything run and not bank today. Well, not bank now, because I still get the feeling we're just going to pull back and get a movement on DAX. So I'm just going to hold it for the minute. But that's all I've got for you today. We've been through everything. We've chatted about stuff again, which is good. I like lots of questions. It's really good to have lots of questions in the group, in the live rooms, because it's, you know, pick my brains. Most people don't like my answers, but hey, I tell it like it is. It's better to tell it like it is. I've been lied to so much over my life from trading educators. I'm not going to bullshit you. It's not easy. Not an easy job. You're better off knowing it like it is and seeing it like it is, warts and all. Right, I will be disappearing. It's 10:30. We've got 11:30. We've got the autumn statement. So pound, be very careful if you're in any. Well, if you're in pounds and you're position trading it, you haven't got a choice. Good luck. If you want to get into any pound trades, obviously, yeah. If you're taking any trades today, I mean, it's not a day to start position trading. If you want to take some trades today, use stops, and yeah, you may well get a very nice run today. So be aware that 11:30 it's starting. It might not be a spike. It might be one of those kind of choppy, and then off we go from there once the market's digested the information. So that's coming up. We've got Philly Fed at 1:30 ahead of the New York Open. And then that's it, news-wise, for the rest of the week. So toodaloo. Toodaloo, Seymour. Yeah, so be obviously aware of that today. But other than that, yeah, we're waiting, obviously, in a holding pattern at the minute on a lot of stuff. So I think we're going to get some really good movement either today or tomorrow. So just be ready to pounce, which is why I'm kind of holding stuff at the moment. Everything is looking like it's starting to move. And this could quite easily be turned into very nice profit today if we can get some movement US dollar wise. So we'll see what happens. But I'll be back tomorrow morning at 7:50, same time. But you don't have to worry about anything after Philly Fed really today. It's all no news for the rest of the week. So just trading as normal. So I will see how we go. I'll add to this position as well. I'm going to add another one on a break here down at these lows. So we're either going to hit these lows and bounce, or we're going to slam these lows today and we're going to run. So I'm going to add and look for a second position to be added on as a runner, which will bring my break even up to here. So there's my position 1, position 2. So break even will be here. So I'm looking for a break of that low to get into another position short. And yeah, I need to get some of that loss back from yesterday on this one. I'm only 1% down. It's a new one. I need to get it up to 5% or so. When it's up to 5%, I'll leave it and bank it. All right. So have a good one. If you need anything, come in the Telegram group. I'll be in there all day. I'll let you know if I'm banking anything of what I've got on. I'm not entering anything new today unless Euro Swiss pushes up, which it is. I need it to be extended really, but I might take another Euro Swiss today. So good luck with the pound if you're in it. And we will see what happens. But I should be watching that 11:30. Watch it on the BBC if you want to. They'll be broadcasting it. And then we'll see how we go from there. All right. Anything you need, Telegram group. Otherwise, I will see you guys in the morning. Have a good day.